Hello everyone. Today in this lecture we will discuss about RSI indicator. RSI is a momentum indicator which is known as relative strength index. It measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock. It is an overbought or oversold indicator that attempts to predict the trend reversal point. RSI is based on the observation that a stock which is advancing will tend to close nearer to the high of the day than the low, and the reverse is true for declining stock. Typically, a look-back period of 14 days is considered for its calculation and can be changed to fit the characteristics of a particular stock or any trading style. This indicator can also be used when comparing two different equities on a relative basis. Let's talk about overbought and oversold zone of RSI. Now see here, the RSI value oscillates between 0 and 100 and it is called the limiting oscillator. As for wider, when the RSI value is above 70, it is considered as overbought, and when the RSI is below 30, it is considered as oversold. Some traders use 75 by 25 or even 80 by 20 to define the overbought and oversold levels. We will see the overbought and oversold levels and try to plot the RSI indicator on the price chart. Now take a look at the chart. You will find a lot of interesting developments. To begin with, the red line below the price chart which indicates the 14 period RSI. If you notice the RSI scale, you will realize that it's the upper bound to 100 and the lower bound to 0. However, 100 and 0 are not visible in the chart. When the RSI reading is between 30 and 0, the stock is supposed to be oversold and is ready for the upward correction. Similarly, when the stock reading is between 70 and 100, the stock is supposed to be heavily bought and is ready for a downward correction. The first vertical line marked from the left, which shows the level where the RSI is below 30. In fact, the RSI is 26.8. Hence, the RSI suggests that the stock is oversold. In this particular example, the RSI value of 26.8 with the support, which gives a trader a double confirmation to go for long. Needless to say, both volume and support and resistance should also confirm to this. The second vertical line, where the RSI turns 81, a value which is considered overbought. Hence, the trader should be careful in this decision to buy the stock with support and resistance pattern. Support and resistance pattern backed by a RSI of 81 is a sign to short the stock, which follows that this is a quick and short correction in the stock. The example that I have shown here is quite nice and meaningful for both the support and resistance and RSI perfectly. Now let's understand how to calculate RSI indicator. For explanation purpose, we will do it manually. Now see here, we will take the open, high, low closing price of Reliance Industries. The closing price is mentioned in column E. Next, we need to compute the changes in closing price. To compare the closing price of the current day with the previous day's closing price, please note them down. Thus, from the table for the 2nd Jan, we get the changes in price as E5 minus E4. Now, selecting at the corner of the F5 cell and then just dragging and dropping down for the remaining periods. So, this is just basically a Excel fill tool function. Next, we need to compute the advance and decline column, which means gain or loss column respectively. We will now create two sections depending on the fact that the price has increased with respect to the previous day's closing price. If the price has increased, we note down the difference in the advance column. For example, on 2nd Jan, the price has increased, we get 25.46. Thus, the value would be noted in the advance column only. Next sections is depending on the fact that the price has decreased. with respect to the previous day's closing price. As it's a loss, we note it down in the decline column. Now look at the data for 2nd Jan and 4th Jan. There is no decrease in price, but if you look at the data for 6th Jan, there was a decrease in the price by 35.32. The value is written as negative in the change column. We do not mention the negative sign in the decline column. Only we write it as 35.32. In this manner, the table for the column advance and decline is updated. Now let's move to the next section to compute the average advance and decline column. In RSI indicator, to smoothen the price movement, we take an average of the gains and loss for a certain period, while we call it as average. A little explanation would be needed. For the first 14 periods, it is a simple average of the values. To explain it, we will look at the average of advance column, where in the table, the first 14 values would be from 2nd Jan to 21st Jan, where we will add them and divide by 14. So in the cell, we are getting 10.20. Since we are placing more emphasis on the recent value for the next set of values, we use the following formula. Similarly, we will calculate the average loss too. Based on this formula, the table is updated for the column average advance and average decline. Next, move forward to calculate the relative strength. Now, to make the matter simple, we add a column called relative strength, which is simply the average advance divided by average decline. Thus, for 21st Jan, we got the value 1.20. In this manner, the table for the column RS is updated, and we will drag and drop down the formula. In the next step, we finally work out the RSI values. So this is the RSI formula. We just put the values as per the formula and drag and drop down to fill these cells. In this manner, the table is updated. This is how we get the value of RSI